I want to start over here with the NASDAQ. Take a look at the charts a little bit. We had some interesting developments overnight. I was going to start off with the NASDAQ and S&P 500, and I'll go right back to them quickly. But here on the 10-year, we have an interesting development. We had a gap below that next sell impulse. There's been 3 of them now. We were watching that and looking for that to develop. It's kind of a big deal to see whether or not we see the pressure that yields are putting on out there, specifically towards the Bank of Japan, come off a little bit. And you're seeing that with the dollar down today. And that's all welcomed behavior. And then you're seeing oil. We were looking at, this is all very important to me at least. The way that I'm viewing the markets right now is that what I'm watching, obviously, everyone's talking about this time is different because the Fed is tightening into a slowing economy and they're doing it because of inflation. So that would mean that inflation is probably one of the most paramount things out there. We saw the last month, the CPI was so hot and largely because of, you saw services coming off year over year, but because of energy. So what's going on with energy since? We've seen oil come off almost 20%. When I say 20%, I'm just talking about from this last little peak over here and down to that 17%. And now we see, or we're watching, price holding that local support, consolidating yesterday right above that local support, and then it broke down. And you can see price coming up now for the retest right now. So that's interesting. Did it catch any support? Nothing really of note. I mean, there's obviously a lot of supply in that whole area. That's where its first breakdown coming in for the retest right now. So that line remains super important. We got to watch this line over here and see whether or not prices resumes back down or it's able to regain that area. I don't know what happens from here, obviously, and it could go either way. Most people are betting on oil going higher, and that could very well happen. We're just going to, that's why I'm digging into the TA, obviously. Oil does need to break down, though. It needs to really close below 94, even lower. I'll call it 93. Close below 93. Let me get a line over there just to remind me, in order to say that, oh, well, it looks like that we have a trend reversal taking place. Powell testifying this morning, this is coming from his speech this morning, and he reiterates that the American economy is very strong and well positioned to handle tighter monetary policy. I absolutely believe that. I personally believe that. That's something that I have said from the beginning. Now, I didn't expect risk to act the way that it has. It has come off obnoxiously quick and hard. Nevertheless, I do believe that the American economy is pretty strong. And the question is, what about Japan and what about Europe? Are they positioned well enough to handle tighter monetary policy? When we talk about a hard landing, or we talk about not having a soft landing, is that going to occur with something breaking inside the U.S.? Or are we looking at our closest allies, something breaking out there? Just food for thought out there. He did say that we therefore need to be nimble, responding to incoming data and evolving the outlook. Data dependent. I think why we're probably a little ahead, and I don't mean that in a good way. I mean that I think that in us trying to see perhaps if we're seeing a near-term peak in inflation, and the reason I say near-term is because eventually they're going to go back to printing. Either that, or you could see already the idea of loan forgiveness, of debit cards, or free direct stimulus to help at the gas pump. All these things are going to more or less, in the longer term, go ahead and take this perhaps flattening out of this hot inflation, and it's going to go ahead and it's very easy to reignite a simmering fire. The reason I'm watching so closely what's going on with the 10-year and with oil is just to see whether or not over the next couple of months we're going to start seeing signs that that inflation is leveling out. And most likely it would not be till like the third quarter, September, October, where it really became noticeable, if that's all going to happen. That's why I say we're a little early, but we want to, watch it in real time. And at the same time, really work on improving our timing. There's one thing about being able to see what's coming when, and there's another being able to be perfectly in tune with that timing. And because we're always striving to do better, we want to work on the timing aspect. We're pretty good with the what's going to be happening aspect. NASDAQ, we saw it this morning coming up towards the top end of the resistance of this range, and then going ahead, and we're seeing, or I'm noticing over here, that we have buyers unable to do something. So far, again, today, this session, buyers able to hold on. We need to reclaim up here, right? Reclaiming this, the end of this resistance. That then will bring into play the next trend line resistance. So we got lots of resistance above. One area, two areas, reclaiming or a breakout of here. This will suggest to us that equities actually have a chance of putting in some type of rally. S&P continues to be weaker than the NASDAQ, and you can see why the NASDAQ is up over in this part of the range, top of the resistance. S&P continues to lag. Why that's important, because if you are looking to sell and sell off a resistance, you want to attack the weakness. The weakness here right now, why for the beginning part of the year was the NASDAQ. It appears to be the S&P 500 right now. I have no idea. No one talks about the contagion risk between if the Bank of Japan loses control, what that looks like for the US dollar, what that looks like for the euro, and what that looks like for risk markets. You know, Brent Johnson, I would say this is more or less close to his forte, right? His strength. I think it's fair to say the relation between the US dollar, the rest of the markets. There were many people inside macro for a long time waiting for this very event to happen with the Bank of Japan and looking for, that yen to come off, whether it was first 130, then 150, and even to 200. I think it's fair to say that everyone missed that trade. I myself take responsibility for that. That's just poor. We should have very quickly realized once the U.S. was set on raising rates, as it was made abundantly clear to us at the beginning of the year, and we should have been thinking a lot more clearly. So I take responsibility for that as well. But people this is where they parlay, they all missed it. But Brent happens to believe, or is under the impression, that this current, just like inflation, in my own personal opinion, we're going to see that, even if it cools off, it's going to come back on, potentially. It's not to say that deflationary forces actually don't take hold and last a lot longer than people think. If you all remember, and if you do, smash the thumbs up here this morning. But if you all remember, we called at some point, I think it was June 2020, the commodity breakout. It's fair to say it's just over the last 3 to 5 months that people have really picked up on the story of that hot commodities. That's why this article is so interesting. It starts with the oil fallout. It's talking about, I understand that a lot of people over the last, we saw oil, and pull up a chart of oil. On the invasion, this is where oil became very interesting, right? And it shot up so far and so quick that it was not possible to chase it. The opportunity for sure was in this area. That was an opportunity zone. This was obviously another opportunity. And up in this area, this is where a lot of people FOMO'd. You know what? I'm definitely not saying oil doesn't have the possibility throughout the rest of this year to go ahead and do some interesting things. We could kind of line it up. I'm not doing anything until we reclaim this horizontal broken support right now. If it does, that might line up some long trades. But right now, we just had first the sell impulse and then lost support. So we're coming in for a retest right now. So long oil right now, you're in no man's land. Like I said, the trend for it to be, turning the other way, we want to see oil below 93. We're just watching a breakdown potentially developing, and we're in no man's land. It could go either way. And I just want to come back over to here. So what they're saying is that, listen, and it could be, it says that oil, black gold is not immune. When I say it could be, obviously everything has changed ever since, Russia invaded the Ukraine And then we've seen these massive chess pieces being moved around with first the US and EU sanctioning Russia. And then, like, we all know that actually Europe can't do without Russia's oil and gas. And it's all complicated. Obviously, we're not getting into that right now, but the dynamics of the market are different, that we absolutely could, even with the US and or world going into a recession, we could see higher oil prices, and that would be absolutely severely difficult, right, for the world to deal with high energy price. That's stagflation, and it's just be slapping everyone around. That would be bad, bad, bad. But that might not be what happens, right? Oil might actually be sniffing out over here. Wait a second, we are headed towards recession, and we talked about that. These things could snap back right quick. It's just getting started, perhaps. And this is also interesting. And it says that we saw the breakout of that long, massive, decade sloping trend line break, and we called the breakout of commodities. People all of a sudden towards the top, and maybe they're not late if indeed we do see a new world order take place. But here's the thing: we just talked about the timing is everything, right? So there could be some type of correction, and it could last anywhere from 3 months to a year and a half, or who knows, right? But during that point, PS over here, if inflation peaks at elevated levels, which it just did, right? Instead of actually correcting hard, commodities might go more along the lines of sideways. And that also fits in with what we talk about where, well, our base expectation is that if we're seeing CPI kind of flatten out, we're looking for it to come back towards that 2%, that Powell is, but we might see it flattening out year over year. And then I guess that they could say it's 2% because they could measure it year over year, and they could be like, look, it's back at 2%, instead of measuring it back from where it was, into 2020 or so on and so forth. So anyway, this one deserves your attention. I want to go ahead and send that over there. So good calls and bad calls. And the bad call was, for sure, Luke, was not having the presence of mind to, at the time of those trades developing, to actually thinking of that as something long term. Back then, especially, very short term time frame minded, trading equities off of 1 hour, trading FX off of 8 hour, and swing trade in mind frame. Good call, but very, very bad in not understanding the longer term consequences. I could say the same thing about Bitcoin in December. Yeah, good seeing the technical breakdown taking place. Very bad in being deterministic about a blow off top and not being very, like, all as I did at that point was say, well, the model's broken if price, goes sideways from this area or anything, but never talking about that potentially that could be much, much more of an important place for a lot of people to lock in profits rather than simply just take paper profits and or de-risk down. I could probably point out a million other mistakes. So a million other. I'm trying to, the other big one, the other glaring one, the biggest one ever, and coming off of one of the best things ever, over here in 2020, did the best job ever calling oil peaking out. This is the day that Iran fired the missiles. We did a tremendous job in this area over here, talking about, well, our projections for 2022 was like somewhere around $35 a dollar barrel oil. And then as things started developing, we dropped that down to 24. And then ultimately we dropped it down to 14. And like no other, crushed this on the downside. Here was where it was really bad, is after oil went negative, after that whole problem resolved itself, this was a generational opportunity to get into long oil and not even try to trade it, but just to hold. And I made that same mistake, by the way. I'm going to point out all my mistakes today here. I made that same mistake on silver in 2018, because in 2018, after the big crash, buying down over here as low as, I thought it was 8, but I guess, up until 12. Could you imagine? I mean, like true in form of cutting your winners short, probably taking profits somewhere around 15 and thinking that like a hero. But that's a bad trade. And it's those things that make you better. Gold, let's take a look at it. And let's start off with a higher time frame. I like the view that we were looking at. That's why I didn't have it, right? So we have this over here. And then at the same time, we went ahead and we just cloned that off of the lows over there, off the daily lows, right? So we have this. Gold is definitely doing its thing. And what do I mean by doing its thing? I mean that it is basically in this environment, it's holding its purchasing power. Now, if you remember the great debate that I was having is what was better up from January to May? Was it better to be dollar cost averaging into dollars or dollar cost averaging into gold? And I guess from that perspective, gold hasn't gone anywhere against the dollar. So I guess that it's neither here nor there. And so that debate continues. There's no right or wrong, I guess, on that one. Why gold is advantageous, in my point of view, is because at any point in time, for sure, the dynamics could change where like gold could be repriced. Gold is so heavily manipulated that the only possibility here is that gold could be repriced until we return towards growth. So what I'm thinking out loud here is, let's say the Fed pauses their interest rate hikes. Gold might not respond initially somewhere here towards the later part of the year, whether it's the third quarter or fourth quarter. However, right now you see the market in the end of 2022 is pricing in the Fed will be cutting rates. And that's moved up, I think, from March 2023. Why that's worrisome, by the way, is because once the Fed starts cutting rates and then starts cutting rates rapidly to zero, that's because things are bad. And that's when you're going to see for sure, everything coming off. That's when you probably would want to own dollars. That for sure. When I say that for sure, I mean, I believe that earnestly. Nothing's for sure. It's the markets. So I hope that anyone got that last couple of sentences. It's very good. So I hope you did. But that's that. So equity markets, though, Bitcoin, when the Fed starts cutting rates and cutting rates quickly to zero, first of all, they're getting ready to do that because they're getting ready to expand their balance sheet and to restart QE. And they need interest rates to be at zero to do that, to be the most effective. But that's when things would be worrisome. There was one thing, it was good talking about at the right time, and that was over here in January, and very, very clear at CTM. Don't dollar cost average into Bitcoin. Make sure you work towards building up reserves up until this date over here, March 12th, during the Luna collapse. And then at Bitcoin 25,000, now's the time to return to dollar cost averaging. And maybe that was too soon, but $25,000 Bitcoin didn't seem too soon to be dollar cost averaging. My neighbor, again, was asking, should I be buying Bitcoin now, seeing that it had come off 50%? I was like, no. I feel good about telling my neighbor now, in this area over here, you could go to dollar cost averaging Bitcoin, and you should do that up until Bitcoin, makes its new all-time highs, or better, $50,000. And by the way, even if Bitcoin, the rest of this year, even if Bitcoin made a new all-time high, I am very worried that Bitcoin could take out whatever the low is at the time in 2023. I do believe in a new structure from that standpoint. What I was trying to get at is that it would have been a lot better, 53,000, actually being a lot more, let's say, intuitive about what was going on and building up bigger reserves. And that's that. What a good start to the week. Monday, Tuesday, today, all super strong sessions. It's what we're here for. I'm glad we're putting the work in. No question about it. Everyone, have a beautiful day. I'll see you all tomorrow. Take care, everyone. God bless you.